son seems to be interested in only one thing. All he talks about, all he seems capable of thinking about, is automobile racing.
Alright, but today is Thursday, the 19th of March. In relation to the economic calendar, today we only had high impact news at 8:30, being unemployment claims. So nothing to, none of the big three. Like yesterday, we had FOMC. This price action is very aggravating to sit through. Yeah, I just felt like Nasdaq was rage baiting. So we're just gonna get into it overall, see what's going on. We're gonna get, as usual, take a look at the higher time frames to get a grasp and a concept of what is going on overall. So you know what, actually, we're gonna take a look at my pre-session outlook before the session occurred. So when did I take these? Yeah, so about 7 minutes before market open, 9:23. So here we have the daily chart. And taking a look at the daily chart ahead of the 9:30 opening, we can see sell side deliverance. We're under the Monday candle, so we have filled that new week opening gap, and we're engaging with this wick right here. To be honest, naked eye, that's consequent encroachment. We're in the discount in relation to it. And then we have the hour 4. My trades today stemmed from the hour 4 chart, so I liked what I'd seen on the hour 4 chart, which was this devil's mark right here. So we end up seeing that this would be your 6 a.m. candle. It's just instantaneous deliverance down towards sell side, and then we also had this cracking correlation right here. So going into the AM session, I was looking to see signatures, bullish signatures in price action that would permit for me to take a longs. I was looking for standard deviations that would align for the targets I was already seeing beforehand. And the devil's mark was something that I was very keen on. Now, one can argue and say that, well, before the devil's mark had occurred, so before the 6 a.m. opening of this candle, we have this candle right here, which delivered into this hour 4 SIBI. So this devil's mark here could be a sign of very heavy one-sided order flow, in which it is, and that is correct. But a devil's mark can mean one of two things, and yes, it can mean one-sided heavy order flow, or just the engineering of buy side or sell side. And in this case, it was both. We have that engineering of buy side and sell side, which you see on lower fractals, but it was also one-sided heavy price action towards sell side, and the objective was achieved, but only on ES because we had this cracking correlation with a weekly low. So right here, this is in fact, is it? I was gonna say it's the first week of the month's low, but it's a weekly low anyway. So we have that cracking correlation that resides right there. So that is it for the hour 4, and then we have the hour 1. Honestly, not much to say with the hour 1. The hour 1 chart hasn't been the cleanest in a sense of like finding trades based off of the hour 1. Then you have the M15 as well. So hour 4, M15, once again, that's your time frame alignment, but this is where a lot of the ideas were stemming from in terms of what I am looking to see in price action. So we had that devil's mark. What I was seeing on the M15 was the fact that true day open, we had no price action above it. So this would be your New York midnight opening. I think that's even a devil's mark as well. Honestly, I don't know. It looks like it's a devil's mark, but there was no price action above it, and that's all I needed to know. We have this high that resides right here. This would be a failure swing high. It does engage with all of this buy side right here. So this would be a high resistance liquidity run down towards sell side, and then you have that TLP. We do come up and engage with all of that, but we don't engage with the midnight opening in relation to forming a high for the IPTA daily candle range. So that was what I was looking at going into the session. And then I also had the standard deviations projected in price from the previous day's trading, being Wednesday. So we have these two standard deviations that reside right here, and you have the -4, -4.5 projecting for this segment of price action right here. And there was a midnight opening that resided here, also had very shallow price action under it. So I was looking to see if maybe price action would go and peak down below, and then a point of inception will occur, but that was not needed. So in terms of the when I'm doing a pre-session outlook, I'm not actually doing an outlook. All I am essentially doing is stating the facts of what has occurred on the left side of the chart. I say higher time from institutional order flow appears to be bearish. Daily chart respecting the daily SIBI, hour 4 chart presenting heavy sell side deliverance, and the hour 4 SIBI being utilized in an efficient manner, but cracking correlation with the previous week low. So we're taking a look at the daily chart. What I'm referencing would be this SIBI right here. We're seeing three candles engaging with this daily SIBI, but we have no closure inside of it, and it's utilized for that sell side deliverance down towards sell side. And then the heavy sell side deliverance on the hour 4 chart would be from that Wednesday's trading, London high of the day, and then we have that heavy sell side deliverance, the inversion of all of these imbalances right here, and then you have the SIBI being utilized in an efficient manner. We have price action deliver into it, and then we have the candle flip on itself overall, and then you have that devil's mark right here. So overall, when you're looking at this, it's very heavy sell side deliverance in terms of the signatures that are being the signatures that are being presented in relation to the order flow. So yes, but there was no higher time frame drawn liquidity. I didn't have a higher time frame drawn liquidity, so there wasn't really anywhere I could say yes, well, I can look for us to go and engage with this low or this high, because in relation to the daily chart, I didn't have it marked out, but we had a cracking correlation right here. And I'm not necessarily looking for us to just turn up and reverse altogether today. And in relation to the hour 4 chart, the only drawn liquidity I could see would have been the devil's mark, but such a deliverance was not permitted yet. And then we have the hour 4 SIBI engaged with, so that would be the higher time frame PD rate engaged with, which was engaged with during the Asia session last night. Intraday order flow clear. Intraday order flow has been bearish. No price action above the midnight opening. No clear intraday drawn liquidity. Expansion towards sell side. So when I was doing the outlook, we were expanding towards sell side. And yeah, in relation to the economic calendar, it's just high impact news, 8:30, unemployment claims, nothing too crazy. So when we jump back on here and we take a look at what we actually have going on, so the daily chart, what we end up taking a notice to is we end up turning back over. I don't know if we trade above the 1800 opening. I think we do. No, we do. We trade above the 1800 opening, and now we're looking at closing bearish. Something I didn't have marked out, we can anchor this wick in quadrants. So yeah, we were in a discount of the wow. We were in a discount of this wick, and I'm pretty sure we engaged with the lower quadrant, and this is where the inception for the low of the day occurred at. Hour 4, we have come and engaged with the devil's mark, so we had the 1400 p.m. session came and completed that. 10 a.m. consolidation. What we can see, hour 4 printing an indecisive candle, and then we take a look at the hour 1 chart. So like I was saying, there wasn't really anything that I was observing on the hour 1 chart, but when I was in my trade after 9:30 opening, I was looking at the hour 1 chart, and I took a notice to the fact that we had this SIBI that resided right here, and also this hour 1 order block, and this would be permitted to be an order block because we have this deliverance into this SIBI that resides right here. So that would be an order block, and I was looking at this in terms of, are we going to see bearish signatures occur once we come and engage with this order block? And that is why I ended up getting trailed out of my trade, because we engaged with this hour 1 order block, and I was seeing bearish signatures, and I no longer wanted to be in a trade, so I managed to trade rather aggressively with a sense of clarity and logic, of course. M15, holy, disgusting. Straight consolidation. To be honest, it's quite a pretty consolidation, because what you end up having here is a 3-drive pattern. So sell side engaged, and this a 3-drive pattern permits for the fact that we don't have to end up seeing the external pool of liquidity being engaged with. So you have sell side engaged. This would be the external pool of liquidity. Because we've just performed a 3-drive pattern as we are delivering down towards sell side, there is no reason for us to come and engage with this pool of liquidity right here. It's more than permissible for price action to roll over and begin delivering towards the other direction. And what we end up seeing as well is during this 3-drive pattern, we're engineering buy side. So buy side engineered here, buy side engineered here, and it's not really clear to see it on the M15. We have to drop down into the lower fractals, which we will, but we are engineering buy side as we are performing a 3-drive pattern. We're not having a seek and destroy pattern in here. Initially, I actually did think today was going to be seek and destroy, and seek and destroy would look like this. We're essentially just engaging with buy side and sell side each and every single time, but instead what we end up having here is buy side being left and sell side being engaged with, and then winds up, yeah. So honestly, yo, today's price action is low-key got me feeling okay. So 9:30 opening being right here, sell side deliverance, and this was the 09 Monday midnight opening that I was referring to from the 15-minute chart. So when we're looking at the 15-minute, we have the -4, -4.5 standard deviations. True day opening, that was from the Monday's price action being the 9th. So I was observing this. I was thinking to myself 9:30 would come and deliver us under this midnight opening. So a discount in relation to this day, and then we can end up seeing that buy side delivery up towards buy side. So we have 9:30 open, instantaneous deliverance down towards sell side, and beautiful, to be quite honest. Love it. Reason why being is because when we look on the left side of the curve, look at all of this price action. And this is what I mean when I was saying that we were simply just engineering. On the M15, I'm going to be switching back and forth a lot. We have this high, and then we did, this is where I was referring to the engineering of buy side liquidity while we were doing the 3-drive pattern. So that would be that high right here. But then there's all of this liquidity that resides right here. And then there's also this being a devil's mark. I didn't have it marked out as a devil's mark, but it's a devil's mark. And it's also in alignment with the previous settlement. So that was where my first trade was looking to, I was looking to collapse my trade. Now, we have that sell side deliverance 9:30, and then we have price action meander around for a little bit, and then we have that cracking correlation presented at 9:35, which is exactly what I wanted to see. I didn't want to see price action offer this cracking correlation during the 5-minute candle that was printing. So it came into fruition, and then we have that change in stay in delivery, and I was looking to execute off of this. In the execution video, I actually did have my limit placed on the change in state, and price action comes, I don't even know, that looks like a tick. Yeah, just 3 ticks under, so just under a point, a tick under a point, 3 ticks away from my limit. Now, to be honest, I am kind of confused as to why I didn't market execute, because me saying that, I low-key just realized why I didn't market execute. It's because we weren't actually within the time range I'm looking for. So normally I'm looking to execute my trades during the 9:45 mark. Now, it's not necessarily that, oh, this is the sole reason I didn't market execute, because if I'm being completely honest, when I'm engaging with price action, it's complete robot mode, in the sense of like, there's not too much thinking going on in terms of like second guessing myself. You know, like, you have the knowledge stored in your head, you have the data that you've collected. All you're looking to do is, you know, use the experience with the data that you've collected in order to navigate through price action in an efficient manner, in a sense. So I limit ordered this. I could have market executed, and there are instances where I would market execute because it's very close. It's a close proximity entry, but I simply just decided to leave the limit here, and price action just ends up delivering away, and I end up canceling the limit and entering off of this imbalance right here. Reason why being is because this candle here would have been your first presentation. So first presented fair value gap was printed for the AM session, and it's being utilized as a breakaway gap because we don't return back into it, and we end up utilizing this imbalance right here. So I ended up having my stop loss at this intermediate term low, which I felt rather confident about. I was under the speculation that, okay, maybe we will end up coming and engaging with this change in state, but it would be deterring away from the order flow that was being presented, because we had just inversed the 9:30 candle right here, and then we were returning back down into it, as well as this BISI that resided right here, and then there's an intermediate term low right here. So it was rather clean in terms of, you know, looking to execute off of this BISI and then looking for price action to continue its way towards buy side. I was rather confident in price action coming and engaging with this previous settlement as well as the devil's mark because we have the alignment with the -4, -4.5. Now, I was wary of the fact that, okay, this is a -2, -2.5, and what occurs here are the reaccumulation of orders as well as the redistribution of orders. Now, with the reaccumulation of orders, I was wary of the fact that I could end up being stopped out of my position. So I was looking to manage the trade once we had come and engaged with the -2, -2.5, as well as the fact that I had mentioned earlier, we had the hour one order block. 10 a.m. candle ends up engaging with it. So 546 is the level, and that 546 level is just right here. So literally the high, and this is exactly when I ended up managing my trade. I remember quite vividly, actually. I ended up managing my trade and putting my stop loss just right here at this low. So initially it was at break even. Once we engaged with that our one order block, my stop loss was jammed up here, and it well and truly could have been jammed up right here, because you would not want to see bearish signatures occur from the deliverance of that hour one bearish order block, and that is what we ended up seeing here. So I put my stop loss here because I said I'm going to give it a bit of room to breathe, in a sense, because we could end up doing what I anticipated us doing in terms of digging rather deep into this candle, but not invalidating the candle fully, as well as the fact that I wanted to see if we would change the same delivery. Series of up close candles, series of down close candles, in which we ended up doing. We ended up having a change in staying delivery, and that's when I ended up getting taken out of my trade. And price action delivers all the way down, and I would have been taken out break even. So rolling on with the price action, we have that deliverance down towards sell side, and then we have that deliverance back up towards buy side. Honestly, I'm literally just going to be saying that the entire time. Deliverance up, deliverance down, because that's what we had done. Straight consolidation the entire day. We have this deliverance up towards buy side, cracking correlation presented itself. Now, I was more than willing to take a trade from this point of inception that resided right here if any of the correlated assets came and engaged with this high, but they all failed to. They all failed to engage with this high, and we simply just retrace back into this range. In here is a 15-second change in stay in delivery, and that's where we end up continuing down this sell side delivery motion. And yeah, that is what it is, you know what I'm saying? Because this was all within a 45-minute window in terms of, the 30-minute window in terms of the window I like to generally execute within. So this segment of price action was occurring during this window, so I was more than open to taking a point of inception to deliver back down towards sell side, because when we look at this price action, TLP just residing all under here. So yes, if a second cracking correlation offered itself here, I was more than open to taking shorts, but it did not. So we have that sell side deliverance and projecting a standard deviation. So I'm utilizing this leg right here because this is the formation of an order block. Series of up close candles, series of down close candles. In this case, only one down close candle. So it's, rather convincing in terms of the direction price action is trying to go towards. And -2, -2.5 standard deviation, once again, I was more than willing to engage with price action right here again if we offered a second cracking correlation. Instead, what we ended up doing is an offset reaccumulation. So all assets ended up engaging with this low. I didn't want to see that. I wanted to see at least one asset fail to engage with this low. And with the price action that I had already been seeing, I'm not sure if I mentioned this in one of my other trade reviews, but with the price action that I was seeing, I didn't even bother to check if Russell offered the cracking correlation. And now that I am looking at it, Russell did offer the cracking correlation. But you know what? I quite frankly do not care, because price action like this really just it's just annoying in a sense. I don't know, it's just nice when price is nice and algorithmic, you know what I'm saying? It's nice smooth runs, everything's happening in accordance, X, Y, and Z. Besides all of that, we have, so this cracking correlation is valid. We do actually end up offering a cracking correlation. I didn't know. I didn't bother pulling up Russell. I seen YM and ES engage with it. I said, okay, fries, bro, deliver. You know what I'm saying? We have that deliverance up towards buy side, and again, more than willing to engage with price action here for sell side deliverance. Reason why being is because we have this cracking correlation that resides right here, and then what we end up doing is we're tracing back into this range, and in this range we have an M5 SIBI. So I'm looking for M1 signatures to present themselves for me to say, okay, I'm willing to engage with price action right here. And the M5 SIBI was in a premium, so this would be an M1 SIBI, but the low of the M1 SIBI aligns with the low of the M5 SIBI as well. So we end up delivering up into it. I'm looking for signatures to present themselves. We have a cracking correlation with ES right here. And then I'm looking for, once this cracking correlation presented itself, I then go down to a lower time frame and I'm looking for some more signatures, in which we end up having a 15-second standard deviation, 15-second change in stay in delivery. So this candle right here being your 15 seconds change in stay in delivery. Once again, this is another scenario in which I didn't limit order this. I was actually waiting to market execute. But this is another scenario in which I could have market executed the moment we had the candle closure. The only problem is that the next candle opens and it just immediately delivers down towards sell side. So I'm like, okay, let me wait a bit. But we have the inversion right here and we have this SIBI right here. And then I'm like, okay, is the M1 also moving in alignment? And the M1 was moving in alignment, but not in the fashion that I was looking for it to move in. So we end up having this candle that resides right here. And this would be deemed a change in stay in delivery as well. M1 change in stay in delivery, and then 1210 ends up engaging with it, and then sell side delivery. I simply just opted not to engage with it at this point. I took a notice to the fact that we're in the lunch hour, we haven't really done much of anything, and where we price action currently wasn't the best of spots, because we have just engaged with the premium half of this range, and if I'm looking for us to deliver back down, we have to engage with the discount half of this range. So from this low all the way up to this high, you have your equilibrium. We have to engage with the discount half of this range, and what ends up occurring when we engage with equilibrium is a consolidation, which makes sense because it's the lunch hour. So we end up having this consolidation occurring during lunch. Sell side deliverance, we engage with the New York lunch low. And in relation to this standard deviation, this is a 15-second standard deviation projecting for this BISI right here. And this is where price action ends up halting and starting its consolidation. And then we also have the M1 standard deviation projecting for -2, -2.5, this segment of price action right here. So we end up delivering down towards sell side, and I wasn't willing to engage with price action here. What I wanted to see price action do was actually come down and engage with this order block here, as well as the first presentation. So the change in stay in delivery that failed to tag me in, I was looking for that to be engaged with again during the New York PM session, but we end up failing to do that. We have that buy side deliverance projecting the legs, of course, -2, -2.5, cracking correlation. We end up reaccumulating orders, so we deliver down towards sell side under the equilibrium, deliverance back up towards buy side, meandering around for a little bit, just doing complete nonsense. Yeah, at this point, it's, we have the 1400 power of 3 being framed at this current point in time. So we have this very energetic candle, deliverance displacing through this high, and then we have the next candle displacing as well towards buy side. And then I'm saying to myself, okay, if we come and engage with the New York lunch high, as well as this SIBI that resides here, I'm very open to taking shorts because this is in alignment with our -4, -4.5. But what do we end up doing? We fail to engage with the New York lunch high. Now, of course, this is actually a good sign because the only trades I've taken today were long. So initially long here and long here. And all the other trades that I was looking to frame were actually opposing the initial trade that I had taken, which was long, and my target was never engaged with. My target was never met, and this idea was never invalidated. We never came and engaged with this low here. So this wasn't bad in terms of, okay, maybe we can have another long opportunity in a sense, in which we end up having. So we failed to engage with the New York lunch high, and I'm looking at this. It's like, okay, this is the engineering of buy side. And we end up utilizing that 15-second change in stay in delivery that I failed to execute off of because we never actually engaged with it. We just displaced away from it instantaneously. So we come back, engage with it, utilize it in an efficient manner, and then we have that sell side deliverance, and we start off high resistance. And where we're starting off high resistance is rather important. We're not displaying high resistance price action as we are digging deeper into the range towards sell side. We're experiencing a high resistance price action at this point of inception that resides right here. And we know that this high formed relatively equal highs with the New York lunch high, which would be an important time-based liquidity. And we're forming a TLP that resides right here. And this is the reason why we end up seeing very fast price action during the power hour for that deliverance up towards buy side. So we have this deliverance all the way down towards sell side, and YM ends up offering a cracking correlation, as well as the fact that I have this 15-second standard deviation projected out in price. Times of consolidation where the M1 isn't even offering a standard deviation, or the M1 offers a standard deviation that just seems so out of reach. It's either you use the bodies to project in price, or you go down into a lower fractal to grab yourself a standard deviation. Looking at this price action now, -2, -2.5 might align with this leg right here. I'm not sure. Yeah, so -2, -2.5 aligns with this leg right here, but we have the -4, -4.5 of the 15-second standard deviation, cracking correlation offered with YM, and I said to myself, if we offer a cracking correlation here, I'm going to execute off of this trade. And that is what we ended up doing. We have very heavy candle, and it's what I like to see in a sense. This candle is very convincing to trip people to continue delivering, to continue taking shorts, because they're seeing all of this heavy price action. To be honest, I'm not quite sure how support and resistance work or trend lines, but I'd assume the fact that, this high wasn't taken, and I don't know, these highs as well, they're wicks. They're essentially just looking at it as if it's resistance, and we're having this heavy sell side deliverance motion coming down. And then just before our point of inception for market maker buy model to occur, the 1450 candle. So the 1450 would be your macro. That is the start of your macro. So we've just entered an algorithmic time window at the very start, and then we have a very bearish candle displaying itself, which offers a cracking correlation. And then we have a change in stay in delivery, and I ended up executing off of it. In fact, I had a limit order. Because this actually happened a little quick. It happened like quick again. The thing about me when it comes to engaging with price action is that I actually wanted to execute off of this right here. I wanted to execute off of this SIBI right here. So I wanted to execute off of this SIBI right here once we had the inversion, but a devil's mark again. This is a good sign in terms of price action is very willing to deliver in the direction I'm looking for price action to deliver in. But I like to see at least, come and engage with it. That is the reason why I failed to engage with price action right here, and where was it? And right here as well as not engaging with it in this segment right here as well, because I want to see price action engage with it. I want to see at least a wick form inside of it for me to form my entry. And it doesn't have to, especially when we're looking at lower fractals. If we're looking at a 15-second fractal, it 100% does not have to. Market execution is more than sufficient enough, but in this case, I didn't end up market executing. I did have a limit, and when I seen the next 15-second candle just immediately displace up towards buy side, I said to myself, okay, if we end up closing above these series of candles, I'm going to look to just market execute right there and then, because I've already seen this idea before it's come into fruition. I've already said to myself, if we come and engage with this low, signatures are being presented, I'm going to engage with this price action, and price action is presenting to me signatures that I'd like to see. Not only do we have a devil's mark on this candle in the direction that I'd want to see price action go towards, but we also have that change in stay in delivery. So simply market executed once we had the change in stay in delivery on the M1, and then I had this standard deviation low all the way up to this high, projecting for the SIBI that resided right here, which I really liked because, it's an alignment. We have the New York lunch high, and then we have the SIBI X, Y, and Z. It's pretty clean in a sense. And yeah, that was quite literally it for the trade. So the New York lunch high was a very clear drawn liquidity in terms of where to get out. Now I did actually have my limit set for this SIBI that resided right here, but I ended up closing the trade early by accident. What I was actually thinking of doing was letting it run. So I was looking at letting it run, and I was going to cancel my limit, and then I was going to let it run and trail my stop very aggressively while hovering over the exit all positions type of timing. And I accidentally clicked on the exit all positions just ahead of my take profit being hit, because I was going to look to exit out of my take profit and see if we can just, squeeze juice out of it while aggressively managing the trade. Reason why being is because we had the TLP right here, relatively equal highs, unfilled SIBI, failed second stage cracking correlation right here, as well as all of this high resistance liquidity. But yeah, that is essentially it for the trade, to be quite honest. So yeah, we have the power hour being utilized in a very nice manner, just explosive buy side deliverance, like very, very explosive. So what are we seeing here? We're seeing a devil's mark at the open of this bullish candle signature. Price action wants to go in this direction. It's very willing to go in this direction. And then what do we see here again? Devil's mark on the close of this bullish candle. Price action is very heavy. It's quite literally not offering sell side delivery during its course of buy side delivery. And the next candle that follows after, devil's mark on the open of the candle. So we don't even trade back into the previous candle's close to satisfy the sell side deliverance. We simply just open and deliver straight towards the buy side. So these are signatures to let you know that price action is very eager. It's going to run. It's quite literally going to run. And we end up seeing that over the course of this deliverance. Devil's mark at the closes of the candles. So yeah, devil's mark just being printed all across the deliverance of buy side delivery right here. And then we end up coming and engaging with that previous settlement and devil's mark, and that's where we end up fizzling out. We have the consolidation occurring, cracking correlation, and you see, okay, this is an example of what I was saying. So on a day like this, the standard deviations that are being projected or that are being presented and offered are very over exaggerative for what we have. So this is the standard deviation that is projected from here, and it's a lot. It's a lot in terms of, like, there's not a lot of time left in the day. So in order, if there's no lower fractal standard deviation, in which there should be here, but I'm not going to even jump in, the other thing that can be done is utilizing the bodies. So utilizing the bodies of that range to grab yourself a standard deviation. So here we have the -2, -2.5, and that is where we end up halting and reaccumulating orders. So this would be an offset reaccumulation right here. So this would be deemed an offset reaccumulation for price action to then either continue or form another point of inception to deliver down towards sell side. To be honest, only God knows, and I don't care. Tomorrow's price action may just be very dull as well. This is an indecisive candle. Honestly, I'm not really one to be projecting price. Of course, I do sometimes project price in terms of, like, when it's very obvious. For instance, gold. Gold, looking at previous month low, yearly open, it feels very obvious. I already stated this in my Discord and the Telegram as well. But yeah, there's not really much, to be quite honest. I'm kind of thinking to myself, like, am I forgetting anything? Oh, and this video is probably like 30 minutes long, bro. Okay, yeah, that is it for today's executions. Very poor price action in terms of the deliverance that we had seen today. Patience is required as well as clarity and the seeking of alignment in price action, as well as time. So the seeking of both of those being aligned is very important, because it's very easy to get caught up in this price action. I can see where it can catch people up in terms of, like, heavy buy side deliverance. People want to chase this move. They want to get on side with this move, but by the time they have the confidence to even click the button to try and chase this move, it's already going to be too late, and you get caught up in this type of price action right here. And that's essentially what ends up occurring overall for the entire day. Now, something I actually forgot to mention at the end of that video would be, on a day like this, and not just only on a day like this should be an everyday thing. You should be as zoomed out as you possibly can in order to get the bigger picture of what price action is doing. Because, and the reason why I said on a day like this, because on a day like this, it's very easy to get caught up in the chaos that is occurring right here. But it's not as easy when you are zoomed out, because you have the bigger picture overall. Right now, when we're looking at this chart, we can see what has occurred during the AM session. We can see what has occurred pre-New York. We can see what has occurred AM session. We can see what has occurred lunch, and we can see what has occurred during the PM session. You'd want to have as much price action on your screen as possible. It's very, 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 I've said very, very much there because I can't think of the word I want to. It's very much a disservice to be engaging with price action and you're looking at price like this to the point where you can't even see an hour, you can't even see an hour's price action beforehand. It's you there there's no possible way of you know getting the full picture of what price action is doing when you're looking at price action like this, because candles like this will seem like a lot. They will seem like a lot of displacement, and they will be very easy for you to look to chase a move, or try and get on side with a move that is actually just manipulation at the end of the day. So when looking to engage with price action, it's very, very important to have as much as you can from the left side of the chart on the screen, because it gives you the bigger picture, and that's just overall it. In terms, it's essentially just like me going and showing someone a zoomed in photo of someone crying, and I ask them, why do you think they're crying, or what do you think is happening? They're going to say something, along the lines of, well, they're crying, they might be sad or something, you know what I'm saying? But when we zoom out of the picture, they're not sad. They might be crying because they just opened their results from, I don't know, their exams, and they just passed or whatever, and someone is capturing the moment. You've now completely missed the bigger overall picture without zooming out, in a sense. So it's like you have to be zoomed out in order to get a bigger picture, and it's very important with days like this because it's very easy, way too easy, to get caught up in all of this mess. I'm speaking from experience with the knowledge of very early during the start of my trading career, as I am gathering experience. A day like this, I am everywhere, quite literally everywhere, because it's as if price action wants to go everywhere. 1 second it's there, one going here, 1 second it's going here, 1 second it's going here, and it will do it in very energetic fashions that are so easy to trip you up. So being zoomed out, it's very easy to be like, okay, you've done this in an energetic fashion, but what have we done? Where are we? We're actually still in the first 30-minute opening range of the AM session, so actually we haven't gone anywhere. So yeah, that's actually what I forgot to mention at the end of the video. So yeah, that's basically it.